Hello friends, welcome back for Ethereum Technical Analysis. Now, we've been consolidating here for quite a while. Oh, I'm Rocky Outcrop, we're all Rocky Outcropticians, welcome to the family, all that jazz, like, subscribe, blah blah blah. You've seen YouTube before. So we've been consolidating for a while here, so I'm going to just disregard these oscillators down below, more or less, other than to sort of just say that here we are in the middle-ish point of this of the stochastics here, you know, kind of sneaking around what's going to happen, and to say in the RSI, you know, we're coming up towards the top of this bearish control zone. You know, there's and that all kind of just ties in with the narrative of what we've got drawn out on the screen there in terms of this trend indicator we have down below here that's not telling us anything of note, and that makes sense because we're consolidating. Okay, so we can just ignore that. What's the current price? 137.15, so $137.15 for an Ethereum bubbles. So we're inside this triangle, and what's really been going on for the last wee while. So as you can see, we've come up to the tops of the triangle, and we've come down to the bottoms of it. We've come up to the tops, down to the bottoms, and where have the areas been to be looking out for, other than the obvious ones that speak for themselves, you know, with this downward sloping trend line, or wherever that happens to be along that way, and then this upward one, which is always around that 140 area. What was the in-between area to be looking out for when you got this 133 price line where we have the 236 Fibonacci, and that's what we've been playing all of our trading in and around for the last wee while. So currently, where the bottoms of this this upward sloping trend line are coming in at, it's getting closer and closer to this 236 as it happens. Where, you know, if we got to the edge of this end of this triangle, and of course these things are subjective. Like I say in the Bitcoin video, you could just give yourself a tiny little bit of breathing room there, and you can get away with it, and you could even make it work a bit more by going like that. You know, if you change either side, you get little degrees and fractions here and there. So there's a subjective nature to things. We know this, and we use these things kind of symbolically. But the idea being that just as a way of visualizing, people talk about triangles, right? And how when you get sort of 3/4 of the way in, whatever, you've got your chance of that's where sort of breakout territory can happen. And it's kind of interesting when you've got a sort of confluence line drawn through here as well, where you could say, look, if you broke down below this 236 here, for instance, you could still well be within the triangle and nothing really has changed so much. Whereas when you go over to the right here and you say, well, if you broke down the 236 below here, you could be breaking out the triangle at the same sort of time, yada yada, you get a bit of confluence in there. So things become a bit more interesting as well. So it's worthwhile having that line there and knowing about it. And also it kind of explains, in a sense, sometimes what sort of other confluence factors could be on the go as you're looking at your triangle, and just maybe if you're just only looking at one thing at the chart at once. So I guess that's my excuse for having so much mess on the chart. Thanks very much for liking, subscribing, all that jazz, by the way. So anyway, that's where we find ourselves. So if we look here from the low end, where we were a couple of days ago, to the top end where we've come now, you can see there's been a 15% move there in that time. That's nice. And in fact, if you just look to where we were yesterday as well, and where we came down as low as the 126.50 or so and came up as high as our line here, we've got another 10% move to be had there. So in all these videos recently, I've been talking about 10% moves to be had, playing between these areas and and how you can think about your risk. And I'm not a financial advisor, by the way, none of this financial advice, but always unlimited risk involved in here with trading, of course, and everything else. So be careful, do your research, yada 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 yada. But what I've been saying recently is that there's been a manageable system to be had here, more or less, in terms of just strategy and how you could approach this particular area, as we wait and see if things above here could be considered sort of fake out-ish potential, and down here could be considered that. But instead of thinking along those lines that maybe you've talked about or with friends, or when you've been doing this yourself in the past or whatever, instead you just kind of think about this, the risk potential, the risk reward for a 5% move to the upside out. So you pass this for a 5% move reward potential, say just going up as high as $147 with this area, you're looking at for 5%. There's a degree of risk involved there, as we can see looking at these wicks over to the left. Whereas this 10% move that we've had over the last day has been relatively low risk in comparison. Just if you're to, and I know that that's an oversimplification of what risk is. But yeah, that's where that's the story for that. Okay, so I've explained that in enough videos now. I think I'll probably stop explaining that again and again. It's not like, I've been prophesizing enough about it, and I'm not a religious man. So there we go. That's just what we're at now at the minute. So what could happen then in the next wee while? What could we be looking at, and is there anything to let us know? Like I say, these are all consolidating time there. We'll not spend too much time looking at that. In terms of the 4 hours and stuff like that as well, are we putting in highs or lows? No, we're not. We're also looking over towards the Bitcoin price again, as ever, to see how things respond in and amongst all this. There's things on the go here to be aware of. So we'll see how the prices over there work in the next wee while to give us an idea how things could work over here. If the prices go above here, 140, beware, could be fake out territory. The prices go down below here, 127, beware, could be fake out territory. But if the prices come down below 120, then you could be talking about something. I have an alert happens to be sitting here at 117 just out of curiosity. So on that side, towards the top side, your profit taking targets, should we actually go for something outside this area, come in at around that 150 area, it speaks for itself. 155 being sort of your next line up from that, and 163 being the next one up from that. You've got a measured move off the back of this thing, and you can draw it in if you like, if you want to sort of think about how the price is likely to go up to here, but yet no further before you sort of think about things at least. So 177, and you could be jolly happy with that should that all happen towards one side to that side. Of course, your risk then at that point, should you get caught in some fake out trap and it comes back down here, is going to be at least 10% plus then the move, which could go down as far as 89, right, to the downside. We know this anyway. The prices were down there like 87 or something recently enough, and that was a great opportunity for as long as it happens. And then we could go back down there. Overall, we could form some sort of double bottom as well in this formation, so it wouldn't be the end of the world for the bull scenario if that were to happen, but you'd have to see how things pan out in the meantime. And overall, the volume's been going down throughout this entire period of consolidation. So yeah, that sums us up. Thank you so much for tuning in. I'll see you in the next video. Like, subscribe, by the way, all that jazz. You've watched YouTube.